General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, let's do the chart work. So I gotta do yesterday's because I didn't get to do that one. Okay, so Tuesday was the 16th. It was an expansion, high engaged, confidence level was medium. Seeing a price delivery signature, anchor point confirmed, the expansion playing out. Today was a retracement back in the range. Day expectation was Monday. Monday got took out today. NASDAQ on the 15-minute. Took out previous day's high and balanced all the way back down. So kind of like a V shape. More of a rebalance the initial impulse day. The H1. Nice order block here. Nice reuse of the weekly volume imbalance here. Kind of looks like you wanted to make Wednesday midweek reversal, seeing how price is not rushing to fill the new week opening gap. We kind of got that today. Just intuitive. We kind of got that today, but we didn't push back out for me to be like, okay, that is the Wednesday midweek reversal. The daily chart. Surprisingly, Monday low is not swept, but I can use Monday EQ as a mile marker. Trade back above it is a bullish side. Staying in the range is compression for a larger move up, I'm thinking. So we didn't push up today, so that was wrong on that. SPX, a lot more strength from SPX. We didn't drop as low as we had on NASDAQ. Brings to mind the COT study from the weekend saying SPX was better for buys this week. Yeah, it did. That's a terrible job of dropping. And the H1, interesting, it doesn't have the SpaceX hype, yet it's strong. Could be rotation. I've seen US 30 stronger than NASDAQ as well. Yeah, NASDAQ didn't have a good day Tuesday. When it's dropping like this, you be looking at other markets. US 30 actually pushed, and it pushed Wednesday, but it ended up dropping on Kevin Warsh. SPX, the daily, we didn't even push the discount. Then stocks, that was our down day. Down day. Stocks wasn't interesting. The engagement I had to do to trade Zella execution. This is London. I was looking for London low, maybe push up, and there was two stop outs. Followed the plan, yes. If not, what caused it? I followed it, so that doesn't apply. What did I do well? Execution and stop loss, yeah. And what will I do differently next time? Nothing. The framework play out? No, I was wrong on bias. What did I learn about pattern narrative for myself? I'm getting better at picking days to not push. What will I watch for tomorrow? Kevin Warsh. And that happens to be today. Let's do the midweek. So revise or confirm anchor point. So Tuesday looks like part of the week, but we could have that Wednesday midweek reversal. So it's kind of 50-50. And Warsh ain't really give us too much. He basically kind of just said he's not going to be giving us all this guidance. And he wants to get data not through a survey. So like CPI, PPI, NFP, most of that stuff is surveys and it gets revised. He wants real data like a regular business. Like Microsoft gets current data. That's how he wants the federal government to behave. But on the flip side, you can think like, okay, where's this data coming from, and how y'all gonna be manipulating the data? I mean, the data is manipulated right now. So at the end of the day, it's just a lot more stuff for you to think about when it really don't matter. Is the price going up or is it going down, or if I should stay out of it? Just a weekly bias template. I'm kind of 50-50 since it's OE week. I wasn't short, but sentiment is bullish with retail. With FOMC out the way, they can pile in on buys. So I should put in with FOMC out the way, they can pile in on buys. No shifts in framework hit rate, less shots this week. My focus has been on what is the market doing now to keep me out of the non-moving and choppy conditions. So that's good because when I focus on, it's finna do this or finna do that, I'll be waiting and trying to trade it instead of just doing what I was looking forward to do now. Let me get involved. So that's a cool mindset shift. No case studies. We're in week 3, and it's quad witching. So week 1 we push down. Week 2 is the reverse, and week 3 is a small range in premium, still respecting this gap and this order block. So it's like trapped order flow right here. Week 3, the monthly candle, we already retraced and we retested previous month's high, rejected. And we report earnings tomorrow, we can push higher still. Yeah, MU can push us higher. It's hard to fade MU unless they think people are going to take profits, which they could be doing. Profit taking on MU could lead to big drops on NASDAQ. Sentiment. Expansion mitigation signals. We filled the new week opening gap with the wick and rejected. Also, no price has been in premium in June. Yeah. Decision quality, high probability, been taking those trades. Narrative framework accuracy, good. I feel like I'm getting better with understanding how day by day trading flows with 1 or 2 days a week with the real work gets done. Experience, success, failure tag, showing up and sticking to it. And being intentional about my journal. Case studies, no case study. I add tabs here. Wednesday. Today was unclear. Daily stats. Engage. Confidence level medium. All of this stuff is confirmed. Anchor point Tuesday or Wednesday. No expansion. And no, we didn't hit terminals. It's today's price action. Ooh, it's tacky. But it just chopped all day. Wash talked and it dropped. So chopped all day and Kimberly the speech price drop. Nasdaq H1. Previous week's range looking like the stop sign. So we filled the new week opening gap, stopped. I want to see if we run back up for the new all-time high on Thursday. Nasdaq, the daily, the gap is holding that support for now. These them have to look at Emily tomorrow to kind of get a lean on sentiment. SPX, same thing, but we actually got the gap fill. It's prettier, and we respected this order block. SPX H1. Tuesday didn't get Monday's high. Over here, that was the big deal. So Monday's a week high, and it's a potential target. SPX is close to 50% if so we can react here. We should expect to buy from here for this week. But the body close through here, we're targeting this low aggressive because options expiry week, quad witching, all the good news that they could pump has pumped it. Could be looking for some lower targets. Look at the daily. I'm gonna put a gap up on world peace, 2 down days to rebalance the gap. None of the facts have changed so far, that's true. QQQ, nothing on QQQ. Nvidia pushing down, still the heaviest stock. It's the engagement. After Barsh did all his stuff here, got a cool little end of day scalp. Waited for FMC and sold the market on closed macro, followed the plan. That's not that reply. What did I do well? Did not hesitate, get better with executions. What will I do differently next time? Nothing. Framework played out, yes. What did I learn about patterns? Narrative of myself. I waited all day and it didn't hurt. Patience is a muscle, not a talent. That's good. What will I watch for tomorrow? MU earnings. All right. We all caught up and we ready for tomorrow. Have a good day. Peace.